Okay, this is how to use iView indicators. So we start at a very basic level and we just bring any product that we wish to trade. Then if we're looking to view this particular product, the pound versus the New Zealand dollar, through iView's indicators, then what we want to do is bring the information onto the charts individually and explain how they work. So first of all, I'm going to do a blank chart. Again, this is from the templates, which I can go through a little bit later. But that just puts the color scheme onto the charts that best suit how you want to look and interpret the data. So all the indicators can be found in the Insert Indicators Custom. We'll go through them in order. So the first one we have is iView Bias. So the bias, select that and put that on the screen. Now what this gives you is an idea of what the market is trying to achieve. Like with many indicators, an oscillator especially, an oscillator is just something that works on a scale. So from 0 to 1 or 0 to 100. It's still an indicator, but an oscillator just means it has those regions. Again, the RSI is probably the most popular one, where we say that the market is oversold and overbought. So oversold above 70 to 100, oversold below 30 to 0. So that gives you the scale. So when we put the bias on, this again is not trying to tell you to buy or sell. It's giving you an idea of what the market's building up to. So what we see in this example is that when the bias gets to its highest point here, okay, and it's saying it's a potential sell. It's not saying it's a sell yet, it's a potential sell at 75.6. Now that means that it's high on the bias, but it's not particularly the point of which the market's going to turn. What you have to then do is allow the markets to have time, again this is on an hourly view, to then turn and for the sellers to come into the market. So what this indicator is really trying to show is that from a high perspective, the majority of people that look at indicators and oscillators will be getting short into this market because they believe the market will turn. So the market, as always, knows this. So what the market does, the newsreaders, the scanners, the black boxes, the grey boxes, the institutions, the big traders, push the market up when they know the short-term retail trader is going to feel some pain outside of the comfort zone of what the higher levels of these oscillators are showing, closes back down to a more reasonable level. Again, one final fake out indecision here. Smaller indecision, and the market finally sells off. So the indicator and the bias is designed to show you that the market is building up to that trade, but then again, once you've hit the highest point, the further the indicator comes down, the more likely your trade success is going to be. So remember, it's almost to forewarn you that all the people that look at standard indicators and look at things like RSI, stochastics, the marker, etc., are being pushed into a position where they're liable for their short position to be squeezed out. And that's exactly what we see, the market squeezing out. So obviously there are more indicators that you can put in your screens to strengthen this. This is just a one basic indicator that's very visual and allows you to show what the market's being drawn into from an oscillator perspective. So the next indicator we can use is the Bollinger Band breakout, my favorite. This is again a key indicator which revolves around the 50% pivot, Fibonacci levels and Bollinger Bands. So yet again, what we see is the market is pushed up with the lagging indicator showing people that want to get short, they're probably going to get in too early. We see the market break up, it breaks out of a Bollinger Band, hits the 50% Fibonacci, which we know is a key level, closed inside the Bollinger Band, then eventually finds that the lower Fibonacci levels are ultimate point of where the market can get to. So we still have some downward momentum in the pound against the New Zealand dollar, so you'd expect that 1.72564 is the ultimate target. So again, it's another indicator which quickly shows you overbought, pivot, oversold regions that come out of nowhere. And again, the Fibonacci's draw with a specific number of indicators programmed in the background, so they change the market direction, market movement, and they constantly redraw based upon movement. So all the time frames will show you, the overextended points, the pivot point, and the potential retracement point based upon the movement on that time frame. So one indicator will work on any product and any time frame. So this gives you a double confirmation that when you're looking to sell the pound against the dollar. You want to be selling high, so the 50% is a perfect opportunity. All the traders have been pushed out short squeeze by 43 pips or so. When the market finally breaks down, you've got a target to here and a target to here. So your risk reward can easily be set. You can get involved in the markets when the market's coming back down rather than when it's going up. And again, it's just another way of using that framework based upon what's happened in the past to help you predict what's going to happen in the future. So I want to put another indicator on from the iView suite. Then we have the grey area zone. So the grey area zone is very similar in some respects to the bias. Now what this tries to show is there'll be lots of points in the market where there just is no trade. Okay, from an oscillator standpoint, it's really to look at where the extremes are and where the noise is, and then just let you get involved where the market, shows that there is a true correlation. So we see very little green in the chart at all, but green here and green here, the market moves up. So what you're looking for is really low points. Okay, and again we see a double bottom here. So again, it's always leading up that the majority of people now have to be from an oscillator point long the market, because there is, we're at the absolute extremes. So in the next candle, what do we see? The market moves up. So we move from that bottom, and again, 82 pips. It's not going to make you the richest trader in the world, but it's a high probability trade. So what the bias does is it cuts out a lot of the noise and will show you very, very, very strong correlating buy signals, and then when we see the red, very strong correlating sell signals. So again, you can use your straight line support and resistance. Here we don't have any down here, but that again, that can be sharpened and shown by other indicators we could potentially put onto the chart. So the next indicator we can put on in the list is the iView, which is straight line levels of support and resistance. So you can see how quickly the chart starts to build up on this hourly view to show you much more consistent and solid information. So what we're seeing is that here is actually a daily level of support. So we don't have any real further support or further down in the charts. So that could help you when you're seeing this selling action to say, well, we haven't really got as far as any significant resistance on support points, okay, points of interest. So the market could then be likely to bounce from this point. And likewise, when we see the market break up, the next level of interest on the resistance side is 1.74194. So again, we hadn't hit that on the spike, so the market was still indecision. It was still deciding what to do. So the Fibonacci on the hourly took over. That was the most powerful pivot point. And then the market then again continued to sell off. So you can see by scrolling into the chart that these lines are daily, weekly, monthly support and resistance points based upon previous charts. So these will remain the same no matter what time frame you look at. There's significant points in history where the market has turned. And again, this scans through every product, on every time frame, and does the work for you. So technical analysis and again being able to view it on any product, any time frame is the touch of a button. It is that easy. Okay, so another indicator we can put on from the custom selection will be the light. Now the light is just a series of instructions. Okay, so that will give you an instruction how to run through what all these Fibonacci's mean. And it's not, again, for the more experienced traders, but if you just need an idea of what the market's trying to achieve by hitting the expansion points and the retracement points, it gives you that idea that a simple trading strategy could be just to pivot around the 50%, or at each level there are potential trades you can use on the varying time frames. Okay, so a little bit messy, I guess. It does clog up your chart a little bit, but again, it does give you defined rules of how to use what is on the screens. So another indicator we can then use is the Newsreader. Okay, so the Newsreader is exactly as it sounds. So instead of waiting for fundamental news to hit the markets, you have this. So in 21 minutes, we've got personal spending as a medium impact, what the previous and what the forecast was. So instead of having to go to MyFXBook or Bloomberg for an economic calendar, the data is reminding you what's going to happen in the screens at all times. So we know the markets move 80% of the time due to technical analysis, but 20% of the time that's speeded up significantly by fundamental data. So you have that all available on your screen. You never miss a news event. And then you can then use that data to trade the markets that might speed up technically. Okay? So another great use of iView charts. Now the final indicator is the trade view. Now the trade view was meant for really quieter markets when you were looking for absolute extremes in the markets, potential buy, sell signals. Now, again, all the things like the Fibonacci retracement points you can order. So again, if you want to just concentrate on things that are pivoting around the 50%, again, what you look at, so we'll be looking at the DAX. You know, at the 50% retracement, we've got buy signals. So if we wanted to then look at what the DAX was doing, we could then double click that and see that the market's bought up, you know, aggressively. We're consolidating, so it could break these expansion points and get to upper levels, which we don't really have in the DAX until we get to these really big chunky levels, these monthly resistance points. But we're clearly buying in the markets. So again, another way of looking for the absolute extremes that the iView identifies and being able to then to go into the charts. And again, if you want to just trade, just click on your one-click trading, and you can just trade directly that quickly from the charts based upon that we might want to buy at the 50%, expecting a quick bounce in the markets up. And again, we could see this is a flag type scenario, almost like an upper pennant where the market is a strong direction, is consolidating. So as it comes down, you want to buy dips, expecting the market to make a new high based upon all the technicals we saw. So it's very interesting that how you turn a very, very basic blank chart. Again, remember, if you're looking at the market just in normal terms from MT4, you go from this, which shows you very, very little, to this, which again gives you a lot of visual clues, a lot of visual triggers, and again that fundamental newsreel to give you an idea of what can then affect the markets in the short term. So as a package, it's very, very customizable and very, very easy to use. So what, again, you might want to do is once you've played with the indicators, is use the other things that are available to you on iView charts. That's to use the profiles. So the profiles are set by how it's best to view the markets with everything put together. So for instance, we have all the products that correlate. So we see stronger dollar, weaker pound, weaker euro, okay, higher stocks, lower gold. So we have all the things we want to look at in one easy to view window. So this again is all the indicators you want to use on an individual chart, okay, and that will be classed as a template. So all your templates are already here for you on every time frame to show you the best setup for iView charts. And then the profiles let you view anything you want on the individual basis that you want. So if you look at the DAX, for instance, we looked until it was a buy signal. Then we could go to another profile which just shows the DAX, only the DAX, with all the indicators and profiles set up, and we have it on the right kind of time frames. So what we have is the daily, obviously showing we're a heavily, a bullish day, showing you the hourly consolidation, seeing a lot of red that the market's expecting to sell off soon. Okay, but because all these indicators, again, are so heavily biased, it shows that the market can be quickly pushed out. So another short squeeze could potentially be brought into the markets. The markets, if we did want to sell high, we want to sell up here rather than selling at market here. So let the market spike up, close back down, again get to the 50% Fibonacci pivot, and then move down. So it's saying that although there's a lot of red on the indicators, it's probably very unlikely that it's going to sell now. It's probably going to push the markets up in the short term, and that's why we got that buy signal. So we'll be buying into the strength and then selling higher for a retracement. So really, when you're looking at what MT4 offers, it's very, very good, allows you to trade very quickly, allows you to get involved in the markets very quickly, put your stop losses in, your take profits in. But then to actually view the data, it's quite one-dimensional and flat. Whereas this way, you get the benefit of my 15 years in the markets, my 15 years of technical analysis, and then instead of having to put these individual indicators, templates together, okay, the profiles in MT4 and iView will give you the benefit of that speed of access. You can use everything right here, right now.